Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, May 7th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to look at is a weekly candlestick chart of the S&P 500 for calendar year 2021 so far. And the S&P 500 was up 1.23% this week, and we closed at 4232.60. This was the first time ever in the history of the S&P 500 with a weekly close above 4200. The next chart that we're going to look at is a daily candlestick chart of the S&P 500. Again, we're focusing on the time frame of calendar year 2021 so far, and we just looked at the fact that this was the first week ever where we closed above 4,200 on the S&P 500. And on a daily basis, there's only been 3 closes ever in the history of the S&P 500 where we have closed above 4,200. Obviously, on Friday the 7th, that was one of those. On Thursday the 6th of May, that was another. And we can see here back in the tail end of April, we had one day where we closed above 4,200 on the S&P 500. Again, that blue line right there does represent 4,200 on the S&P 500. The next chart that we're going to look at is a 15-minute candlestick chart of the S&P 500 that covers the last 2 weeks of trading. So this is a 10-day, 15-minute chart. Of course, the blue line is still set at 4,200. First thing I want to point out here is on Friday the 7th, we already know that that was an all-time weekly closing high as well as daily closing high, but it was also the first time ever on the S&P 500 where all of the trading for the day happened above 4,200 on the S&P 500. And we had a really nice bounce back this week after pulling back on Tuesday all the way down to this 4130 level as you see here. And then the market kind of ground its way higher and closed on Thursday the 6th right about where, the upper end of the trading range had been for several weeks. Now keep in mind this chart only goes back 2 weeks, but the market had really been trading in a sideways pattern, kind of right at and under, just under this 4,200 level for about 3 weeks. Got right back up to that level at the end of the day on Thursday, and in spite of, or perhaps because of, the poor jobs report on Friday the 7th, the market rallied. Now, what I mean by that, and as weird as it sounds, and keep in mind I've been at this for decades, guys, and I've seen this before, sometimes bad economic news is good news for the stock market. What I mean by that is when we had that bad jobs report on Friday, and why I think the market responded positively to that is the market interprets that bad jobs report in a way that says, hey, the Fed's not going to be in a position to raise rates anytime soon, more than likely anyway, and the overall government is going to have to remain very accommodative and keep stimulus going for the economy and the stock market. So that is why sometimes when you see bad economic reports, the stock market will rally because the interpretation is that the Fed and the government overall will have to remain accommodative, and that is generally good for equities. So I believe that is why, and only time will tell, right, if we see any follow through on this or whatever next week, over next week and the following weeks. But that is why sometimes when you see this kind of stuff, it's like, wait, that doesn't even make any sense, right? Bad jobs report, stock market rallies almost 0.75%. Well, that's the reason. So we'll just have to wait and see if that's if that proves to be the case. But the market responded very positively to a very poor jobs report on Friday the 7th. Again, taking us to a new all-time daily and weekly closing high at 4232.60 on the S&P 500. The next chart we're going to look at is a 2-day, 2-minute candlestick chart of the S&P 500. Again, it's just another way to look at, some of the things we've already talked about, but I wanted you to see, again, this blue line is set at 4,200. I wanted you to see with your own eyes that all of the trading, right, in the S&P 500 on Friday the 7th did happen above this 4,200 level, and you can see here the lows of the day, 4201.64, so that we're pretty close to 4,200, but 4201.64 was the low of the day, and we closed on Friday the 7th at 4232.60. This panel over here on the left side of the chart, this is Thursday's price action, and then that dotted blue line is where we closed on Thursday, just barely above 4,200. But again, you can see all of the price action on Friday happened above 4,200. And really, all of the gains happened in the first hour of trading. It's not completely uncommon, but you can see from the open of the market at 9:30 Eastern time on Friday to just before 10:30, that was really the day's gains. And then we just traded sideways after that. The next chart that we're going to look at is a monthly candlestick chart of the S&P 500 that goes back to 2012. The blue line here is the long-term overhead trend line on the S&P 500. And you can see here up in the upper right-hand corner where my cursor is moving, we've had 3 months now where we've been trading above this long-term overhead trend line. Now, it doesn't mean the market can't go higher, but it does point to the exuberance, right, that's in this market. You can see that prior to the last 3 months, every time over the last decade or so that we've gotten up to this area, we've pulled back. You can see it right here in 2014 where we got up to this trend line area, and then the market went sideways and pulled back. It happened again at the end of 17, beginning of 18, and you can see we got kind of close to the overhead trend line area at the beginning of 2020 where we pulled back, and you can see that where we hit this overhead trend line at the end of 2020, then the market kind of stalled, and it's just really been the last 3 months that we've been trading above this long-term overhead trend line. So it's only one data point, but it is, I think, a very important data point that points to the fact that, there is a lot of excitement in this market, and the enthusiasm for equities is as high as I've seen it in several decades. So it is something to think about and keep your eye on, and, we shouldn't be surprised if at some point in the not too distant future we start to see some softness in the market and, possibly pull back to below this long-term overhead trend line, but only time will tell. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.